there. Welcome to the street on BNN Bloomberg. I'm Andrew Bell. Coming up on the show today, Steve Rolls, Senior Portfolio Manager at Trivest Wealth Counsel, Wellington Altus Private Counsel, is our guest co-host. And we're also going to be hearing from our featured guest. He's going to tell us how he created a cookie empire across Canada. Yep, later on we'll be talking to Craig Pike, the founder and CEO of Craig's Cookies. We want to hear from you this morning on our first call segment. Call us with your questions on global large cap stocks. We'll have Steve Rolls, our guest co-host, answer as many as he can. The number to call will be 1-855-326-6266. And we'll open the phone lines in about half an hour from now. The email address is firstcall@bellmedia.ca. Here are the big stories, meanwhile, that we're bringing you from the BNN Bloomberg newsroom. First Quantum Minerals has agreed to sell the Los Cruces mine in Spain to Global Panduro for up to $190 million US, plus additional payments tied to profits. Global Panduro says the deal will enable it to further develop the Los Cruces polymetallic primary sulfide project. The deal is expected to close in the first half of 2026. Shares in Dynavax are soaring in the pre-market. Sanofi has agreed to buy the drug maker for about $2.2 billion US as it seeks to expand its vaccines business. The transaction gives the French drug maker a hepatitis B vaccine that's already being marketed in the US. The announcement comes as Sanofi continues to face challenges, including rejection by the U.S. Food and Drug Administration for its experimental multiple sclerosis drug. And gold has hit a new record this morning, with futures trading above $4,500 US an ounce. Frictions in Venezuela have added to the metal's appeal as a haven. And the U.S. Federal Reserve is expected to follow 3 straight interest rate cuts by lowering the cost of borrowing yet again next year. And this is seen as a tailwind for non-yielding precious metals. Silver and platinum have also hit records. Well, that's our top line. Gold hitting a new all-time high today. The futures trading above 4,500. And the spot price trading above 4,485 to set its own record. It appears that safe haven demand is still out there, with escalating tensions between the U.S. and Venezuela that may point to a U.S. attack on that country. And there are expectations for more U.S. rate cuts. And we've got silver and platinum hitting records. Gold has been an incredible story this year, gaining more than 70% in 2025, and silver has risen 150%. Both are set for their best annual performance since 1979. Let's bring in our guest co-host, Steve Rolls, Senior Portfolio Manager at Trivest Wealth Counsel, Wellington Altus Private Counsel. Steve, thanks very much indeed for joining us.
Hi, Andy. How are you? Great to be here.
Happy holidays to you. Thanks for giving us this time on Christmas Eve. What a year for gold. I think very few people anticipated a surge in price like this.
Yeah, indeed. Very few at 4,500. Nobody expected that. And it seems to be on a one-way track, doesn't it? It's quite something indeed. It's been driven by a few factors. The traditional factors of global tensions always has been good for gold, but I think there's some other factors moving it. Central banks are really focused on buying gold, with the exception of Bank of Canada, of course. But that's a big demand. But there's another demand coming out of actually the new economy, with the stable coins tend to be buying a lot of gold as well. So there's pressure coming from multiple sources now. So it's a real fascinating time right now.
I guess we do have a weak U.S. dollar. If we put a 5-year chart for the U.S. dollar index or the Bloomberg dollar index, we can see the U.S. dollar has sagged, and that automatically is good for gold.
Yeah, it's good for all commodities because everything's based in U.S. dollars, and living in Alberta, we know that better than most. And it is something that with the US dollar down, their index, the Dixie, is down about close to 10% for the year. And it really came off in the first few months in the first quarter during the concern about the tariffs and fiscal concerns, and it really has never recovered while the stock market and bond markets have both rallied, but the US dollar has not. So it's a really, really interesting time in the markets right now.
If you buy, are you a gold holder? Do you like to have a weighting of gold in your portfolios?
The answer to that is not enough. It's one of those things where I don't buy the direct commodity itself. I buy miners, and the miner I have, and it's been my favorite pick of the year in Canada, has been Agnico Eagle. It's just a company that's really done very well. When gold is at $4,500 and the all-in sustainable cost is under $1,500, it's really a license to print money right now, and it's just close to $250 right now, which has just been a phenomenal year. And many other miners have done very well. Newmont is another company I look at as well, but Agnico is my favorite because it's home-based in Canada.
The one interesting thing, of course, has been over the past decade and more, the rise of the gold streamers. Let's put up Franco-Nevada, maybe a 10-year chart for FNV or Wheaton Precious. What's your attitude to them? I mean, you're going to get less torque than a red-hot gold mining stock, I know.
That's true. Less torque, but less downside risk as well. So it's really a financing stock is how you have to look at it in a great space. And for certain investors, it does tend to work out very well. I'm a big fan of Franco-Nevada as well. It's not in my portfolios just because the way I design my portfolios I tend to have a lot of capital preservation through bonds and whatnot. So I need some growth through other companies, but both Wheaton and Franco-Nevada and the streaming have done very well as well.
We have a long-term chart, I think, showing gold this century, and it has done well, of course. But we should note that it peaked, it hit records in 2011, and then was pretty well dead money for almost a decade after that. So gold can be a disappointment over several years.
Well, the one thing about gold is that it doesn't pay anything, right? If you're holding it and it's not moving, you're not getting any yield. So that's why it's traditionally hasn't been a strong commodity in many portfolios. And that's why portfolio managers in the private wealth space like to get at least some dividend income out of buying some miners. But yeah, it comes and goes. But right now, with the fiscal changes in the US, it's really been driven by a lot of changes. We're in a new paradigm right now that gold is really capturing that the new economy that we're in right now, not just the new economy with stable coins and whatnot, but the fiscal policies have really created some demand for some more stability. I think that so much liquidity in the system has gone into the stock market. Now we're trying to find a new place to put it, and the commodities seem to be an attractive place for that liquidity.
We'll have to take a break, but it's really great having you here, Steve, today. Steve Rolls is our guest co-host today, Senior Portfolio Manager at Trivest Wealth Counsel. We've got lots more, but we're going to take a look at the markets as we head towards those opening bells at 9:30 a.m. Eastern Time. Let's have a look at U.S. futures to see how we're going to be trading when the markets open this Christmas Eve. Of course, a lot can change between now and 9:30 a.m. Eastern Time. You can see we could get a softer open, though, this morning. U.S. stocks, as measured by the S&P 500, hitting a record high yesterday, as did the TSX Composite. And let's check out the Asian markets. Right now, you can see a little bit of selling. Japan, of course, has been a huge outlier among central banks this year, moving to increase interest rates, and that has caused ripples throughout global financial markets. And let's have a look at the European markets. The German DAX hanging in this morning. The FTSE 100 in Britain drifting slightly lower. Now let's see where the TSX finished the day. Yesterday, it hit a record high, closing a gain above 32,000. Breached that mark for the first time this week. And let's check out some of the big winners and losers yesterday on the TSX. Bausch Health jumping about 5%. NFI has been rallying lately. It looks like it's put quite a few of those problems with faulty batteries behind it, getting some compensation from the manufacturer. Lithium America is always volatile, down about 3%. And Silvercorp, one of the bigger decliners, down 4%. And yep, drum roll, let's have a look at those metals. Gold at a new record high this morning with the February futures north of 4,500. Silver in record territory as well. And copper in London this week it's up again. And this week in London, it got to the $12,000 US a ton mark for the first time. Let's check out our latest fix on Western Canadian Select, the Alberta heavy oil benchmark, and it is up about 63 cents. And let's have a look at oil, which has had such a rough year. It's holding in today amid speculation that the U.S. is about to step up attacks on Venezuela. And you can see, well, pressure on Venezuela that may culminate in actual military attacks. And you can see oil holding its own. Let's bring back our guest co-host, Steve Roll, Senior Portfolio Manager, Trivest Wealth Counsel, Wellington Altus. Steve, it's been a dovish year generally for the central banks. They've been cutting interest rates.
It has indeed, yeah. If you look at it, the U.S. Federal Reserve has cut 3 times, Bank of Canada 4 times, Bank of England 3 times, ECB has cut 4 times, and the other end of the spectrum has been Bank of Japan, which has increased twice. So it's really a story about inflation, and aggressive policies to try to stimulate the economy, specifically down south.
The interesting thing you note, though, is that bond yields have stayed, longer-term bond yields have stayed fairly high. Let's have a look maybe at the U.S. 10-year bond yield and the Canadian. And you think that's in part investors in those long-term securities. They're very safety conscious. And sure, the yield is down, but it's been pretty flat over the past few months. They are concerned about government debt, among other things.
Yeah, 100%. When you're looking at, the U.S. 10-year, they started to cut rates back in September of 2024. And since then, they have cut, I think, 175 basis points. And while the 2-year has come down, there really has been, the 10-year has actually gone up about 50, 60 basis points since then. So the 2-year is really defined by the Federal Reserve. It really controls what the 2-year and the short-term rates are doing, where the longer-term rates are really determined by the market. And the market participants are really looking at what's happening with this fiscal policy when I always forget the name, the bigger, better, beautiful bill.
Oh, yeah, okay, carry on, sorry. Yeah.
It's a tough one. It's going to be, we need an acronym for that one. But, with fiscal borrowing in the U.S. is going to be about $1.8 trillion. And when those kind of numbers were not expected, we kind of thought that heading into the new year that that DOGE program would cut about $300 billion, and they would increase $300 billion from tariffs, and they would increase the GDP, which obviously is doing well on, by 300, and the deficit would actually come down a little bit. But we're still, they've only put in 3/4 of their 4 quarters that they need. So we'll see what happens. But there is some growth on the GDP side. But overall, the market is a little bit concerned that it's reminiscent of what happened in 1994 when in Canada, for an example, we during the Chrétien government and Paul Martin as finance minister and really responded to auctions that were not successful. So when you're lending out money and nobody's buying it, well, what does that mean? Well, you got to increase your you got two things: you either increase your yield on your coupons, or you start cutting. You start cutting the fiscal policy, and that's exactly what Paul Martin did, and led the way globally on that, but from developed countries. Today, we're in a different story in Canada. The deficit is projected to be 78 billion, where last year it was 42 billion. We didn't expect that. So when these things start to happen, questions start to happen. In Canada, the 10-year for the year has gone from about 322 to about 350 or so. So that creates a steeper yield curve. And that's great for banks, and it's great for retired clients who are going to make more money, more dividends from banks. If you're looking for a long-term loan, it does make things a little bit more difficult, specifically with mortgages.
I just had to remind myself it's the One Big Beautiful Bill Act, and I think OB3 is emerging as the acronym or the short form for it. You may have mentioned this, but the famous bond vigilantes, those are investors who refuse to buy government bonds and even short sell them. As a warning or amid concerns over government debt, could they be a prominent feature of 2026?
I think so. I think it's something to watch out for. And having worked on a bond desk in my past life, it's the bond market is really the canary in the coal mine for the equity market, and it's a reflection of the liquidity in the market. Right now, things are working. But last week we had the Federal Reserve announce quantitative easing part. I think it's the 5th version of it now, and it's really to help with some concerns over some liquidity concerns coming up in April with the tax refunds. So, but the Federal Reserve is going to be buying another $45 billion a month of short-term treasuries and T-bills. So, who's buying the long-term bonds? Now, it's still the major countries are still buying it. Like China owns about 800 billion. The UK owns just over that, and the number one holder is Japan. But at the same time, the biggest holder in the world is actually the Federal Reserve. So while we've had since 2008 a situation where bull markets and great low interest rates and everything, the bond market really has been supported by the Federal Reserve.
Sure.
In 2020, in March, during the first weeks of COVID, they stepped in. Bond ETFs were suffering. Their net asset values were way down, and major crisis coming, but they stepped up and provided liquidity in that. But it seems to go from monetary theory to monetary policy of quantitative easing. And what it's done is created these short-term interest rates, and that's been great for the equity markets. But now we have the affordability issue, and that's going to be the theme. So if and what we're calling the K economy, where the richer got richer with their asset wealth, with their houses and their stocks and whatever they have, and but people who don't have those assets are really struggling. And
we'd better move on. Steve, finish your thought.
Yeah.
Okay, we'll leave it there because we'll be getting back to you very shortly. Sorry to cut you off there, Steve. Time running short. We are going to be back with Steve Rolls. We're going to find out where Caterpillar, Honeywell, and TC Energy are on his radar. Time for On the Radar. We're back with our guest co-host, Steve Rolls, this morning. Steve, you are looking beyond the AI hyperscalers. Tell us why Caterpillar is one of the stocks on your radar.
It's exactly because of AI. Two things that are really driving Caterpillar, and it's actually leading the way as the best performing stock on the Dow Jones, which you think of Caterpillar, you think of big trucks, great trucks that we used to play with in the sandbox type of thing. But what's really driving it is AI. Two things: power generation and turbines are really in demand right now because of the AI data centers. So that's been a complete win for them. And on the AI infrastructure, which I think is a great theme, where you can take advantage of some AI momentum and the CapEx, but you know who's getting that money? It's companies like Caterpillar. And another factor for Caterpillar is that with the mining boom, and we're seeing it with all-time prices of copper, you mentioned it earlier, that mining is the demand for copper is, and electrification is used. Copper is the number one tool for that. So copper's up, AI is up. The benefit of that is a company like Caterpillar, which is more aligned with the type of companies I like to buy, which have been around forever, paid decent dividend. I think they've been paying dividends for over, I think, 30 years or so. So it's really, profitable. So it's a good way for conservative investors to really look at how do you benefit from an AI momentum.
Honeywell is another stock that's been catching your eye. What draws you to this name?
One word is simplification. The other word would be they're in the middle of restructuring. Right now, they have 4 business components. They're going to be moving to 3. Well, they have actually moved 1 off already. Their advanced division has moved off to a new company called, what's it called? Celeste. And it's doing very well. But so they're going to be now copying what's been quite popular. I guess it's the McKinsey advisors are now telling these big industrial companies, well, why don't you separate into more companies and be worth more? And the poster child of that has been GE. There used to be one company, now there are multiple companies, and you divide them all up, they're worth more than the sum of the parts, and they're taking that approach. It's a company that has lagged lately because of this restructuring, but I think the benefits are going to start coming. And in the meantime, you get paid about 2.5% dividend. They're also involved on the quantum computing side with a great company, which they're a major shareholder in, along with some other great companies, including a great private equity group called Serendipity Capital. They are planned to monetize that at some point. And if you look at AI to quantum, it's sort of like the comparison of, I use this analogy when the web is really for, if you're looking for a book to read, the web is the card catalog. If you're looking for a group of books to read, you talk to the librarian. That's kind of like AI, where quantum computing is going to be allowing us to read all the books under one topic at once. So while we're focused on AI so much in this data center and all the risk, the future is quantum computing and the emergence with AI. So it's a very exciting time in the market right now. And a conservative company like Honeywell getting involved in a great company like Quantum, which they will monetize, sort of shows what's happening in the marketplace right now, where traditional companies are benefiting from this AI CapEx boom.
We're going to have to take a break. Up next, we're going to look at how a theatre graduate created a Canadian cookie empire. We are talking to the owner of Craig's Cookies after the break. And our phone lines will open shortly for the First Call segment. You can call our guest co-host, Steve Rolls, with your questions, 1-855-326-6266, or send an email to firstcall@bellmedia.ca. We'll be right back. BP has agreed to sell a majority stake in its Castrol Lubricants division to U.S. investment firm Stonepeak Partners. This is as the oil and gas company seeks to reduce debt and reset its business. The energy giant will raise about $6 billion US from the sale of the 65% interest. Earlier this year, BP overhauled its strategy to pull back from renewables and refocus on its core business. First Quantum Minerals has agreed to sell the Las Cruces mine in Spain to Global Panduro for up to $190 million US, plus additional payments tied to profits. Global Panduro says the deal will enable it to further develop the Las Cruces polymetallic primary sulfide project. And gold hit a new all-time high this morning, with futures trading above $4,500 US an ounce for the first time. Fear of U.S. conflict with Venezuela have added to the metal's appeal as a haven, and the U.S. Federal Reserve is expected to follow 3 straight interest rate cuts by lowering the cost of borrowing again next year. And this is seen as a tailwind for non-yielding precious metals. Silver and platinum have also hit records. And that's a look at U.S. futures. Looks like the Nasdaq 100 will hold its own this morning. The latest U.S. GDP numbers were strong, but there was a slump in consumer confidence. Christmas Eve means we're preparing to leave out milk and cookies for the fat guy tonight. And speaking of cookies, our guest has spent more than a decade creating a cookie empire across Canada. Let's talk now to Craig Pike, owner of Craig's Cookies. Craig, thank you very much indeed for joining us.
Hi, hello, Merry Christmas Eve.
At one time, you dreamed of being an actor, and that's a tough profession. You ended up, a lot of people become waiters, but you went into the cookie business. Just remind us how you got started, please.
Absolutely. You know, I worked as an actor in Canada for about 10 years. I worked at a place called the Shaw Festival. I was pretty successful, and
Sure.
I had about a month off of work in 2013 and needed to pay my phone bill. So I thought I would maybe sell cookies to my friends on my bike. It's my mom's recipe. And so I hopped on social media, said, does anybody want a cookie? Somebody did. I biked them over to Parkdale in Toronto and sold about 200 dozen cookies that first month, just kind of popping around. And then for the next 5 years, I just kind of did that, and then opened my first bricks and mortar in 2018. And now we have 23 locations across Canada.
They're all but one are in Ontario. You've got one in St. John's, Newfoundland, where you have roots.
We have one I'm from Newfoundland, so we have one in St. John's. We just opened in Calgary about 2 weeks ago, and we're set to open in Halifax early 2026.
So what's different about your cookies? I know you're going to say they're the best in the world, but what's distinctive about them?
Well, they are the best in the world, but it's my mom's recipe, so it's, homegrown. And what I did is I started putting little chocolate bars, like my favorite chocolate bars, inside the cookie. So it started with an Oreo, actually, and then like a Mars bar, peanut butter cup, Twix bars, and now we'll put anything in a cookie. We've put chicken nuggets in cookies,
What?
Pizza. Yeah, absolutely. It was a huge hit at the CNE last summer. You dipped it in barbecue sauce. So kind of the world is our oyster, or the world is our cookie when it comes to flavors and what we put inside those little beautiful biscuits.
Now, I believe you have about 14 franchisees and about 7 corporate stores. My numbers may be a little low there, but so you have both. Your model has both formats.
Yes, exactly. During COVID, we saw growth within the company. Everybody wanted to send folks sweet little treats. And then I saw that as an opportunity, that growth, to be able to expand the business. And we decided to go down a franchising model.
Steve Rolls, do you have a question for Craig?
Yeah, hi, Craig. Great to meet you. Yeah, and have been to the new store in Calgary on 17th, and fantastic, great location, and great success. You can do very well there. I have a question. You're just talking about franchise, and I have a few clients who have some franchise businesses, and maybe you could just expand on your model for franchise, and second part, maybe describe how the franchise model for in Canada and how strong it is.
Yeah, I think there's a lot of growth right now within Canadian businesses and Canadian grown businesses. I think what's happening internationally has had the consumer really reflect on where they're spending their money. And we're seeing so much support for our business, being a Canadian business. Within the franchising model, I really love giving folks the opportunity to be able to also now run their own businesses. For me, one of the most important parts, obviously, we want to work with people that have strong business acumen, but also that have strong ethics and strong morals, and within capitalism in a way. I think because I come from the arts, it's really important for me to be able to offer really great spaces for people to work. We offer benefits, we offer GRSP programs, programs and really great incentives for people to work at Craig's Cookies. And then me as a member of the queer community, it's important to be also like socially active within our communities. So that's a really important like I said, component as far as when I'm meeting potential franchisees and where we open. So if kind of the measure of growth is quality over quantity in a way.
Yeah, that makes a lot of sense. And it's really seems like you're really dedicated to creating a culture, which is everything. So if I go to the one in Calgary or go to in Toronto, I'm getting the same type of service. But one other question, just whenever I talk to successful entrepreneurs is, what was your greatest failure and what did you learn from it and how did it make you successful?
I think my greatest failure happened actually when I was an actor that I was able to bring into business. You know, I was so afraid of listening and I was so afraid of being my authentic self within the craft of acting. And I remember I did a play back at the Shaw Festival years ago where I was really challenged to think outside the box and not be afraid to say, hey, I don't know what I'm doing right now, and then rely and and receive support from people that are better than me. So I was able to learn that before I even opened Craig's Cookies. So since starting Craig's Cookies, I've really, really relied on people that are smarter than me. You know, I didn't go to business school. I didn't go to baking school. And so what I've learned is literally from people that are smarter than me and to be all right with saying, I don't know. And then educating yourself and learning about what you may not know about. That's an important component to it. And also really, really deeply listening to people. And trying your best to be able to meet their needs, whether or not that's an employee or, you know, somebody that comes in and they're like, hey, do you have this, like my favorite cookie is Nutella? And if we don't have it, it's really important as we grow, you know, when you talk about franchisees, it can be, you can lose control over your business quite quickly, and how to hold on to that kind of small mom and pop feel. So if somebody comes in and we don't have a cookie that they really want, let's take the time and effort to make sure that the guest gets in a hospitable and really careful experience when they come into our stores. I think hospitality is so important. I guess that's the Newfoundlander in me, and to try to put that first and foremost is also really something that we strive for.
Craig, I always admire independent business people. How do you handle the red tape and the bureaucracy between worker safety and I know it's important, but revenue agency, health and safety? Does it not drive you up the wall, all the form filling?
You know, it's a really important part of the process. It is also, I think, we are living at a time where things have changed. The workforce has changed. I think so. That can be challenging. I have a very great therapist who helps me through a lot of that, and really great team members that support that as well. You know, and like I said, when we offered our benefits program, it was really important that a component of that was for mental health. So yeah, it can be challenging. It's definitely different from what I'm really good at, which is pretending to be other people in the arts and being an actor and a musician. But you know, it's one day at a time. And like I said, it's really about just listening and staying calm.
Craig, thank you very much. I bet you'll be back on the stage before too long, maybe even in community theatre, because I can see you still have a love for it. And I do have a cookie request: extreme ginger and extreme hot pepper, please.
I will. Okay, so we can get that to you by the end of next week. For sure.
Thank you very much. Yeah, that's great stuff. Craig Pike, owner of Craig's Cookies. Still ahead, private markets. There's been a lot of hype over them. The Trump administration is moving to make it easier for investors to put money in there. But are they losing some of their allure? That's ahead. And our phone lines are now open. Steve Rolls will be taking your questions on global large cap stocks. 326-6266, or you can email firstcall@melmedia.ca. We're back with our guest co-host, Steve Rolls, Senior Portfolio Manager at Trivest Wealth Counsel, Wellington Allsorts Private Counsel. Steve, there's been a lot of talk of private markets, and of course, we've had so many companies come off the Toronto Stock Exchange and going private deals. GDI Integrated was just the latest yesterday. But you reckon that some people are having second thoughts about these private markets because, of course, the liquidity is not there in many cases, and it's harder to track the value of your investments.
Indeed. It's the private markets really started to flourish back in the 2010s when after the global financial crisis, and the next thing I was working in Hong Kong, Singapore at that time, and it really started in the U.S. and then it was quite active there. And then I came back to Canada, and then the private market business started to develop here back close to 10 years ago. It really stems from the lower interest rates that we've had for such a long time, and that the leveraged buyouts, and so that created a big market for it, and it's been quite successful up until recently. The past 4 years, there's been declining expansion, and why? Because it's just getting harder to get the debt financing, and it's harder to really understand what you're buying right now.
That's interesting. I mean, we hear a lot, certainly interest in getting retail investors to put money into the private markets. And I got to admit, I'm wary. I want something that I can look at the internet every day and see what my holdings are worth.
Exactly. Now there's a lot of promotion in the market about private equity, is that, well, it's not as volatile, but Apple trades 220 days a year, and it's extremely liquid. Where private equity, it's the accounting is done a few times a year, and you determine your net asset value, and that's the value, and that's what you get. But the main factor is that you don't have access to the money until the fund is matured. I don't know if do you watch a show Landman?
Sorry, say again, Steve. What was that?
Landman. It's on Paramount.
Oh, I've seen it. Yeah, I've seen the bits of it. Yeah, carry on about the Texas guy negotiating oil leases. Yeah.
Exactly, and it's a fantastic show. Another Taylor Sheridan success. And there's a scene in it a couple weeks ago where the head of the oil company, played by Demi Moore, is trying to figure out what happened to her husband's $400 million, and the lawyers goes through this convoluted scheme of holding companies and private companies, and it turns out that the missing $400 million was in private equity, and so everybody's like, okay, well, let's just get the money out, and the lawyers comes up with like, well, unfortunately, we don't have access to it, and there's the very strong penalties if you do that. You get 20 cents on the dollar. So while private equity has been successful, there's incredible technology, there's incredible things happening. It's a situation where buyer beware. And I'm not a big fan of the democratization of private equity and private credit. We're seeing some private credit funds in Canada gate their real estate funds, and so you can't get your money out. And that's very critical for private wealth investors to have that liquidity. So be careful what you're buying. There's some great private equity groups out there, but it's not a product for everybody.
We're going to have to take a break. We're going to check some notable analyst calls after this. And remember, we want to hear from you. We've got Steve Rolls taking your questions on our first call segment. We'll be right back. Let's check out a couple of notable analyst calls and recommendations this morning. We'll have a look at Tesla in the pre-market. Canaccord is raising its price target on the stock ahead of the company's delivery report. Now, Canaccord says that, sure, expectations for Q4 deliveries are lower, but there's a reset of the American electric vehicle market, and it's, quote, laying the groundwork for a more durable and attractive long-term demand. So the price target going up to 482 from 482 to $551 US. And let's check out FedEx in the pre-market. Deutsche Bank is reiterating that giant courier as a buy, saying the stock is cheap. It says that FedEx has generated, quote, enviable revenue growth, fueled by double-digit growth in its domestic business. And Deutsche says it thinks that FedEx will be unmatched over the next while across transportation providers. Let's get a little more from Steve Rolls, our guest co-host today. Steve, what's your attitude to Tesla? We did see it hitting record highs just a little while ago. Would you be a buyer of that stock right now?
I like how you phrase that. What's my attitude about it, not my analysis of it. It's I follow it, but I don't buy it. I don't buy it for my clients. For me, it's just too volatile. Yeah. It's close to 300 times earnings. It's a great success story, but is it worth more than all car companies combined? No, it's not. But the thing about Tesla, you got to look at it as a tech company, not a car company. Great technology and done incredible things, but for my client base, it just doesn't make sense.
Right, market cap of about $1.6 trillion, and the share's up 20% this year. I suppose the bulls on the story would say, well, it's a play on robotics and AI and self-driving, not just a car maker.
Yeah, that's a good point. The self-driving is something that is coming, and that's part of this AI infrastructure wave. But it's just not. I think the value's already been priced in. That 300 times earnings, that's just not something I'm going to include in my portfolios.
FedEx, the stock has been something of an underperformer this year. It's up only about 5%, yield of just under 2%. Is that a name that attracts you at all?
It's a name that I watch. I used to hold DPS and remove that. During the COVID times, they were quite successful. It does have some operational and some tariff issues in that organization, but I can see why it is getting some attention because it hasn't been a performer, but it's not something that I cover right now.
Steve, we've got to take a break. We're really excited to have you after this answering questions on our first call segment. Call in with your questions for Steve Rolls, 1-855-326-6266. And the topic today, global large cap stocks. Bob is on the line from Toronto. Go ahead, Bob, please.
Yeah, hi, Andy.
Hi. Good morning. What's your question, please?
Yeah, my question is on Microsoft. It doesn't seem to be doing very much for the last couple of months, and I'm wondering what's the stagnation behind it. If Steve can give me an assessment of that, I would really appreciate it.
Nice.
Great. Thank you for the call. It's a situation as one of the major hyperscalers. It's really been caught up in some of the concerns on the AI situation. And I agree with you. It's somewhat frustrated that it has not been a big mover since the summer here, but I'm still very optimistic on it. It is leading the way on the AI revolution. It's leading the way on AI infrastructure. They're the ones who had that great deal, the opening deal with OpenAI, and that's been a complete success. And they continue to have to be able to feed it into the model is a great thing. The way that I really invest in technology is, I call it infrastructure technology, where right now we're using Microsoft. It's a thing we need. It's a kind of a Warren Buffett type of mentality of buy companies that you need in case there is a recession. We're still going to be using Microsoft all the time. So I think this little breather that it hasn't done that well this year is an actual good opportunity for one of the best companies ever created.
We have an email from Shane. Shane is asking, Nike's good enough for Tim Cook. Shouldn't I also just do it and buy? And he's referring to the fact that Tim Cook just bought another $3 million worth of shares. The Apple boss has been a director of Nike for 20 years. What's your take on Nike?
Yeah, I did see that earlier today, and that was a good headline. You can see by the chart, it just has not done well. It's a situation where they really got caught up in the tariff situation, and I think that's going to continue. They really made a mistake a couple of years ago in their direct to customer business, and they haven't been able to restructure that. And until they're able to really get into their full groove again, I think that it's a stock that I do not hold right now. I like the dividend. I like the culture of it. And I like that they're trying some things, but they need to get back to basics a little bit and not get involved in the geopolitical situation, which unfortunately they are, and their dependence on manufacturing in China and Vietnam.
I mean, Nike, it's a bit like a show business stock, isn't it? Once they have the buzz and once they come out with the hot shoes, they're back on a roll. But it seems they have missed the boat lately.
Well, they're trying. I mean, they did try to align themselves with Kim Kardashian,
right,
which is about as Hollywood as you can get. But it's Hollywood and the products aren't going to cover the manufacturing costs that these potential tariffs and the situation raises concerns of a stock. So until that's resolved, it's something that I'm not going to participate in.
We really appreciate your joining us today, and it's been great fun. And Steve, I hope that you have a wonderful holiday. All the best to you and yours.
Best to you, Andy. Really appreciate it. Merry Christmas to everybody.
Yeah. Steve Rolls has been our guest co-host, Senior Portfolio Manager at Trivest Wealth Counsel, Wellington Altus Private Counsel. Don't go away. The Open is up next.